Okay, welcome everybody to this evening's ACY Securities webinar. Tonight's webinar is Forex Trading and Live Market Analysis. My name is Duncan Cooper, so welcome. And just to give you a heads up what's coming through the course of the week. So tonight is Forex Trading and Live Market Analysis. And then tomorrow evening, same time, 7 o'clock Sydney time, we're going to go through market liquidity, introduction to smart money concepts, part 1. That's tomorrow evening. And then more live market analysis on Thursday at 7 p.m. All right, so that's what's coming up. And just for the purpose of the recording, if you're watching the recording, you can register for the webinars by using the link in the description below, okay? All right, for those that are already in the webinar, you already know how to register. So before we get into it today, if you can read through the risk disclaimer, that would be great. Any questions to the chat box or to the question and answer box. If you're on our YouTube live stream, I cannot see the chat, but you're more than welcome to join us. I've given you a link there that you can follow to come to the webinars. All right, so if everybody can just read through the disclaimer, that would be great. All right, let's move along. Now, if you don't know me, my name is Duncan Cooper. I'm the Senior Market Strategist and Trading Mentor here at ACY Securities, and I'm a full-time Forex trader. I've been trading the market now for more than 15 years and mentoring clients for more than 10. If you want to contact me, my email is on screen there, duncan.cooper@acy.com. Through the week, you can connect with me at our website, acy.com. Go to the Market News tab. Find my analysis there on our YouTube channel, ACY Securities Australia. And you can connect with me if you wish on Twitter and LinkedIn. They're my handles. And through the week in our Telegram channel, if you want to get access to our posts in there, then contact Nathan Bray. His email's on screen, but I'll put it in the chat in a moment. As well, if you want to get access to my chart layouts and templates that I'm using in the webinars, then just contact Nathan. He will organize a setup for you. So I'll put his details in the chat. And if you want or have any questions about maybe setting a demo account up or a live account, then he's the guy to talk to as well. So he's the go-to guy. His details are in the chat there. All right, so let's get into tonight. Let's have a look at the news items coming out over the next 24 hours. So as always, I just like to use forexfactory.com. And we'll just go through the red items. So there is very much a risk item tonight, the US CPI data, month-on-month, year-on-year, core CPI month-on-month. So the yearly inflation figures, the monthly inflation figures, expecting a move down for year-on-year to 5.2. So it's going to be highly volatile at that time. So my analysis tonight won't be opening trades right now. I'll be just looking at patterns, levels, trends for what's happening after the CPI data, because over the last few months, the first 50-minute candle was probably at least 100 pips from top to bottom. So it's going to be extremely volatile. And if this doesn't come in on print, then it will be extremely volatile. If this comes in, I don't know, comes up higher than expected, that's not going to be good for the US dollar at all. I should correct myself. It's not going to be, it will be good for the US dollar. The US dollar, I'm sure, will soar. If that comes in way worse a figure, so I don't know, 4.8, then I'm sure the US dollar gets smashed. So higher number is good for the US dollar. A lower number will be poorer for the US dollar, okay? But very difficult to trade. It will move instantly when the data comes out. So you're either positioned right or wrong. So let's get into the charts. And we are seeing a bit of an uptick. Pairs to the US dollar moving up. All right, so dollar index at the moment, this is the picture. At the moment, the weekly picture, I've been discussing the fact that we are theoretically in just an uptrend. We have a higher top just, but I mean, that could be a false higher top, false break. And we're holding at the 79% level. We've been holding there. We did trade down, but the previous 2 weeks we were holding at or above the 79% level. And this week, currently, we're holding at the 79 level. So is that going to hold for a move up this way? We will have to wait and see. Or are we going to get a trend change? Are we going to move down through this weekly bottom here and weekly support here at 101.28? Now, we do have a downtrend on the daily. I was very positive yesterday. I was expecting maybe, okay, positive first day. We're going to have another positive day today, but any positivity that we saw yesterday is getting reclaimed back at the moment, waiting for the news item to come out. So not easy at the moment, difficult to take a position at the moment. S&P 500. Now, from the monthly perspective, this is still in a downtrend. There's your lower top to a lower bottom. It keeps coming up to retesting the 79% retracement of the monthly range. On the weekly, theoretically, it's in an uptrend. You have a higher top to a higher bottom, but we keep failing at these weekly tops here. More weekly top to the left, more weekly resistance underneath here. So this is the critical area. If we're going to continue in an uptrend on this weekly chart to break the monthly downtrend, we need to get beyond this 79% retracement level. And let's see what camera's telling me. Saying everywhere you look online, we're seeing doom and gloom for the dollar, and Russia and China, India and Brazil are all moving away from the petrodollar. Is this all right? Or I don't know. I just trade the charts. I don't know. But I mean, if they are, theoretically, that would be potentially weak for the dollar. I did see, as I'm talking about the stock index, I saw on Twitter on Saturday a webinar that was done on YouTube with, I've just forgotten his complete name now. Harry Dent, I think his name is, and he's a US economist stroke. He does a lot of work on population density, change in population mass, and how that affects the overall economy. And he's forecasting from the high of the S&P 500 up here, possible 80% decline, and he's anticipating that if this decline is coming, then by the end of June, we should start to see that collapse in the stock market. So are we holding up here at the 79% level at this weekly resistance area, ready for a collapse? So at the moment, it's a bit difficult here. It's still holding an uptrend on the daily, but it's coming up. You know, it needs to take out this high here with some conviction to really start to show a strong uptrend. This could well be topped out already here, or simply just, you know, come up to test these highs again, just to the left across here, and then fail. So this isn't where I would be buying at resistance. I'd be more inclined to wait to see whether this can turn over back to the downside. Now, if this turns to the downside and we see the dollar index, you know, do the opposite, turn back up, we could see a correlated move, stock market's down, dollar index back up. Or if the dollar index breaks its low, this was probably going to break this high over here to the left. So data release this week, well, I'm sure tell us which way price will be moving once we get the inflation figures out tonight. All right, so let's have a look at the currency pairs. And we might start with the pound pairs. And we had a nice sell-off yesterday, but we are back above last month's high. And let's go to the day chart. So the big question still is, we couldn't last week hold above this double top. It is in an uptrend on the day chart and the weekly chart now. Monthly trend still remains theoretically, well, it's a little bit ambiguous because there's a bit of a top here, but last year's trading range, which I've been focusing on, which is from there to there. And if I drop that down now to the weekly, we're sticking at or around the 62% retracement of last year's whole trading range. And I actually thought this may have been the yearly high, but of course we traded above it. So at the moment, are we moving higher, or are we going to false break this 62% level coinciding with that double top? I'm sure the next couple of weeks will give us some clarity, but at the moment it's just 1 or 2 pips below at the moment. So it's probably going to hang around there till the news comes out, and then we'll have to see what happens. So we're at a key level of resistance where the market could definitely fail at. And this move up here to potentially create this false break triple top maybe is coming up from a lower point. When we broke through these two lows here, I was thinking, okay, we are moving down, but no, we come all the way back up. So are we going to form? We've had a 4-day sell-off. Came up, took out all the stops, 4-day sell-off. Are we going to hold at the resistance level this week, 124.48, to maybe put in a lower top this week, or are we continuing up? For our charts, just breaking back to an uptrend, or holding at the top form yesterday, and it's not going to go far, I'm sure, before the news comes out later in the day. So critical level to watch over the next couple of trading days is 124.48. We could pop above there when the news comes out, but if we start to trade back below 124.48, anticipate that we may be false. Maybe a false move to the upside, and we may well trade back down. All right. So it's going to need some good positive news to clear 124.40. I thought we started to clear it last week a little bit, but no, couldn't close below it by the end of the week. So that's the critical level to watch. We could, I've already made the final top here. If you draw a fib across that move down, at the moment, we're a little bit short of the 62 level at 124.55. So theoretically, we could spike up to that level when the news comes out, deal a little bit above it, have a 62% retracement, form a lower top on the day chart, and we could be moving down. All right. I can't get my head around being a buyer up here at such high levels with the double top to the left. I'd need to see a clear move away from 124.48 to be a buyer. Other than that, I'm either looking for a setup to sell, or I'm just doing nothing at the moment. All right, so 124.48 is the key level to watch there at the moment. You can see we've had a nice sell-off on the 50-minute chart yesterday, but we are back up, coming up to retest 124.48 today. So that would be the area I'll be watching for failure over the next couple of days for a potential lower top, maybe on that day chart. Time will tell. All right, pound yen. Now, we discussed this on Thursday last week, and Edwin, I think you gave me a note on, yes, where we're going to form a head and shoulders here. So I did post this on Telegram today. Now on the day chart, we have actually potentially formed a double top here. I've been saying that this move down from high to low there has been the trend, and then all this movement up has been corrected to the 79% level, possible double top, creating near the 79% level, and don't really need that fib, and we know where that 79% level is, because more importantly, just breaking it down to a smaller detail at the moment. Is this a left shoulder here? Is that a head? Now, at the moment, we have been trying to hold. That's last month's high as well, that left shoulder. Trying to hold there, but it is a little bit on an uptick with that pound dollar moving up. But over the next couple of trading days, do we start to top out? It could still come up to retest 166, but over the next 24 hours, do we start to see some form of maybe decline, change of 4-hour trend, a bit of a rally back up? Can you sell a rally in this area? Do you start to see some negative price action in that kind of right shoulder area for a decline back down? And I'd be looking for a decline. This is a right shoulder, decline back down to last week's low, 162.77, maybe breaking down through to the 127 extension. Of course, we could come all the way up. We could break above, continue up. We could come back up to the highs and hold. And then we could be looking at triple top. So anywhere from the 79% level at the moment, 165.62 up to 166.39 is where you could start to see sellers coming in and a failure. So you just need to look for your setup. It's not an area where I'll be buying. I'm not going to buy at the top of a move, top of resistance there. So I have two things I can do. I can do nothing or wait for a setup to sell at the moment. All right, so that's the pound yen. Let's hop over to the euro dollar. Now, 109.22. This area of resistance here where we false broke up to 110.33. We've been holding there for a good 2 or 3 weeks now. False broke it last week. Are we topping out? High and low as well. There's a 79% level. So are we topping out as well? If we just go to the highest time frame, very similar to what I was discussing on the pound dollar. Whilst we're seeing positivity in terms of last year's trading, that was last year's high there to low, just underneath the 79% level. So we could still come up higher. We could test the 79% level to trade at, but we are at the high area of last year's trading range. So we could be in a topping out phase there. Weekly chart, by the letter of trend, this is a higher bottom, higher top, still a higher bottom, so we could still push up and through here. But as I said, count the candles back last 3 weeks, we are holding at 109.27. And the first week of those 3 weeks, go to the day charts, that's the FOMC high. Well, that was the FOMC day. That was the Wednesday's trading. That was Thursday's final follow through up to resistance, and then we dropped off. So we're holding at the FOMC kind of high there from March. Day trend is still theoretically in an uptrend there. We could just be putting in a higher bottom here to move up and through this week. But clearly holding for 3 weeks at that level, to me, it's dangerous being a buyer at such high levels at resistance. So again, I'm on the sidelines or looking for a short because we're at clear resistance up there. All right. And all we're really doing at the moment is reclaiming some of or most of the drop of yesterday. Today chart here, we could obviously move to that low. If we have a day up, it's going to create a swing point here, but we could form a lower top in this area, turn down. So I would just be monitoring that 109.27 level. It's 1 or 2 pips below last month's high. I'll be monitoring that range back up here. All right, 62 level to 79 level, you got that resistance and last month's high all in that area. Some form of head and shoulder pattern could form here. It's maybe not a textbook, but it's good enough. Whenever you get a false break of a high, I don't really care if this low isn't taken out. This could quite simply just come back up to that area there. And whilst it's not textbook, left shoulder, head, right shoulder to move that way. All right, that's what I'll be looking for, a failure up in that area. It's too high up for me to be a buyer. I would expect institutional sellers to be up above that area there. That's not where I'm going to trade and buy. If I'm going to buy, I should have been buying down here yesterday in some form or fashion for a move back up to retest and then maybe a break above. I'm not going to buy into that area. So do we see that happen over the next 24 hours? Further failure up there, or does the CPI data convincingly get price to move above that area? So you can watch, monitor, look for your setup to sell maybe if you can see it form in the area over the next day or two. Euro yen, put this out on our Telegram today as well. It's not quite breaking down though at the level I was watching. So I was watching this high. So this is the day chart. And I might break it down top to bottom before we get into that. On the weekly, held at weekly resistance, held at weekly support. So we're very range bound. We could this week retest 145.56, excuse me a moment. All right, just having a bit of a tickle. All right, so we could come up this week and retest 145.56. Or we may have already had a final failure there, and we could just simply stay in this range and move back down to weekly support. So to the day chart, just put my lines back in. This is a monthly area of resistance from over here that we're back above, so that's not really telling me too much at the moment. So I'm going to take that off. But I had a fib drawn in across that range to see whether we're coming up for a lower top. We were holding out there for a little bit, but we've moved above that day resistance and the 79% fib at the moment. But we may well get back below that area. So it's pretty much the 145 level at the moment. We could see a failure at that level this week. We could see a failure at the top this week too. So we're in a resistance zone. So in a resistance zone, I'm not going to be buying. I'm just watching to see if we can fail. All right, a nice kind of outside high range candle there. Almost a doji. So it's come up and it's also come down. So possibly forming a bit of a double top up there. What I'm just waiting for is, can we move below 145? Does that over the next 24 hours be a resistance area then intraday for a move down? Now, we could also come up to retest 145.56 and the high up here at 145.66 for failure. Or of course, we could move straight through, but I'm not going to be buying into that area. I'm just going to watch for a failure. So just watching for a setup. Can we move below 145? Can it become intraday resistance? All right, at the moment, if we did drop down to the 15-minute, let's get rid of these lines. Say that 145 is acting as some form of support at the moment. So I need that. We did try to break down, but then we're back above. You can see intraday here, it's holding at 145. So what I'd like to see is a convincing shift. And then this area becomes resistance on a 15-minute chart. Can you see a nice tight entry there to trade down? And that could offer exceptional risk to reward. Even if you decided to trade at, for example, 145, let's say we don't take this top out. So you trade at 145, stop above the high here. You could probably get away with about maximum 80 pip stop. And if we trade it back down to weekly support, that creates you about 1 to 7 risk to reward approximately, okay? That's how you create great risk to reward. And if you get an even tighter entry, the shorter stop, that's how you could really get a great risk reward. So seeing a failure up here, and if you start to see a very good sell-off, have the anticipation we could move back down to weekly support there, okay? All right, let's get into the Aussie yen. Aussie yen, I'm bearish the Aussie yen, as you may well know. And monthly perspective here, we have a lower bottom to a further lower bottom. We have a minor lower top forming there in the monthly, but we've hit 2 monthly levels of support. So that's why we're bouncing at the moment. Can we break down and through over time through monthly support to continue that newly formed downtrend? So weekly trend here, we had a couple of weeks up, negative week last week. Are we going to follow through from that negative week last week? At the moment, anybody familiar with my weekly ranges? There's the high of last week to the low last week here on the 4-hour chart. We've had a 62% retracement almost, just faltering at that 4-hour high. We could have already put in the high of the week there. Now we might get up to 79% level. We sold off all week. We're just trading back up inside last week's range to a higher level. Are we topping out here? That's an outside 4-hour candle. It's difficult to take a trade right now because of CPI data, but ignoring the CPI data, that just looks to me like a failure at the 62 area, just short off, or a move down this week to come down and test potentially 87 monthly support, 86.24 monthly support. Can we move down and through those areas and continue that downtrend. All right, so can you see you're set up to sell? In line with last week's weekly negative candle for a continued move down. Aussie dollar nicely failed up here last week. This is the day chart perspective at 67.83, got a fraction above, couldn't get to 68. It has changed the day chart trend to down, but it's into weekly support over here. But the weekly trend, low bottom, this to me is just corrective for potentially a longer term move down, putting in a lower top. We're going to see, we're going to see, let's just, often we can get equal kind of legs. There's the last leg down. Is that the top? I mean, if that's the top, we're heading down towards last year's low if we can continue and hold that trend down. All right. So can we start to get below that weekly support level for the move down? All right, so day trend is down now. We may pop up though. We may see a rally back up at the moment to the 4 hour. Don't be surprised if we have like a 62% retracement or even a 79% retracement. It's rather range bound, this pair. Don't be surprised. We could come up to 67.26. If we come to 67.55, then there's 4 hour highs to the left here that could potentially hold the market. All right. I'm actually short from just above 68. So I'm just hoping this doesn't really rumble too far back up the range. But, if you're not in and you're looking for an opportunity, look to sell a rally on that day chart. And 62%, 67.26, 67.55 is the 79% level. Of course, if the CPI data comes out very positive for the US, it's not going to rally. It'll just drop and you won't be able to get in. So if you're not in, you can have your fingers crossed for a rally. And we'll see what comes around. Now, the euro pound, I'm going to spend too much on this pair other than we are holding on this long-term line of day support, 87.54. But if I was wanting to trade this pair, I would much prefer to see it dip down to this weekly level of support, 87.22, 87.29 day support just above it, because that is solid support down there at the moment. So dipping down to that area, can you see a setup to buy down in this area? For a move back up the range. I might not break down below 87.54, but that would be my preferred level to watch for. All right, we covered the euro yen. I just want to see what price is doing on the 15. Euro dollar, still heading up. It's probably going to take out the high yesterday. So may well, might just take a few lines off. So we may well get up to that 109.27 level today. We all know where that's heading up at the moment. All right, pound yen is holding at the 79 there, but it's up to you whether you want to trade ahead of the CPI. You're taking on the risk of the data coming out, but there's always that fear of missing out. Some of these levels are very enticing. If the news wasn't coming out, then this is probably an ironclad sell at 79% level, stop above the high, but I will be waiting for the data to come out first of all. All right, intraday at the moment, we still got, 3 hours to go. I mean, this could be failing. The retest at 124.48 there. And, that could move down 30, 40 pips before the news comes out. You just have to work out, do you want to trade before then? All right, let's get into New Zealand yen. It's not the most friendly pair at the moment in terms of strong trend, but those blue lines are the large weekly range that we've been trading in. We may be just starting to break down we've had a 62% retracement, so we could be ultimately moving down. Anybody following in the webinars, I discussed this area for failure, when it was all sideways in here, I said watch that area to trade down. So this could be a 62% kind of retracement here, back up and filling at day resistance last week to see a continued move down and through supports long term. All right, in line with the story that I was telling you on the Aussie yen, okay? And the point I want to make on the New Zealand yen is if you can see an entry that you like and you can maybe hold it for a breakdown, is we go to the higher time frames. Let's get my blue lines off. You know, this has been in considerable consolidation for a long period of time. From long periods of consolidation, if we break, say, to the downside, this could kick into a massive trend. And this major range, we're failing at 79% area up there at the top of that consolidation range where we were failing mid to late last year. So are we having a long period of consolidation before we get a massive break to the downside? So if you can get a good entry within that range and maybe hold it for the break, you may well see a considerable break to the downside. So at the moment, it would be nice if we just get to the 4-hour chart. This move down last week. Would be nice if we could come up to maybe the 79% level, 83.47. It's very close to the day resistance that we were filling at all the way through this area. And that might lead you to getting a good opportunity to sell for that long-term move that I was just discussing. So up in that area there. Now at the moment it's stopping at the 62 today, so maybe it can't get up to that 79, but that would be my preferred option up there if it could get up there. And if you're selling, you don't want to be selling too close to weekly support here at 82.31. Okay, so got to pick your battles. Sometimes you might know where it's going to go, but you don't want to be trading into support. So trading down from resistance would be ideal for the potential of support to break. All right, onto the New Zealand dollar. Now, in fact, I want us to skip back to the Aussie dollar and then talk about the New Zealand dollar. I didn't discuss the possibility, I did last week, but if you weren't with me last week, there's a possibility of some sort of double top here. All right, we're already trading down into a broken downtrend. It may have some form of corrective rally back up, but this double top could come into long-term fruition, and the height of the pattern projected below is down there at 63.44. Okay, so there's the potential there for that double top to definitely run out. I just wanted to mention that because it's a similar pattern on the New Zealand. All right, there's your kind of double top area. So on the New Zealand, let's get rid of that fib. Came up, myself and Nathan have discussed this throughout the course of the year about the New Zealand dollar and its interest rate decisions. Every time it has a decision where it raises rates, yeah, it might spike up, but after that, it seems to sell off all the time, which it definitely did last month. Well, this month's decision. And we have a bit of a double top, triple top affair here. Two tops here. Came up fraction short last week. So if it is a double top, it's also a 62% retracement of this weekly range down. Corrective rally, is this a lower top now in the weekly? So there was lots going on there where we failed. So from a double top price projection now, if we start to continue down, if we break the midpoint here and we follow through, price projection target would be down here at 57.78. That's just a projection. I always use it as a projection. It's not like a guarantee, okay? But they can often work out very nicely. And I try to get in by the 79% area for the decline. That offers you I said last week what it was. I think it said like a risk. If you can sell at the 79, stop above the high, you're getting approximately risk reward of 1 to 9 if we meet the 200 level. All right, approximately. So trying to sell a rally at the moment on this pair would be ideal. So there's a possibility that double top running out over the course of time. Now, let's just have a look at the 4-hour chart. This is the range of last week. We have broken, that's the range of last week. We've just broken the low. So I would be watching, depending on what the market does tonight, we could come back up to these resistance levels from the day chart where we've been failing out for most of last month. 62.94 there is the higher level, which is just below the 62 level at 63.07. So, you know, getting a spike up to 62.94, 6300, 63.07 would be ideal. Whether or not the market will give you that opportunity, you'll have to wait and see. But from a day chart perspective, we've definitely got that double top in play. And I would be looking to try to construct something to the downside, trying to sell a rally. And just getting told that the pound dollar is testing 124.47 slab. Well, you're going to sell it up there, or are you going to wait? I'll be waiting for the news. Oh, you did? Oh, you've sold it up there. Good man. All right, hopefully the news doesn't blow you out. It goes your way. All right, so dollar Canadian. Let's move on to that one now. Now, from the week perspective, here it is. We are in an uptrend now. We do have the, let me just double check. Forex Factory. Yeah, I just didn't want to be wrong before I said it. We got the interest rate decision coming out this week. Midnight Queensland time and New South Wales time. So midnight into Thursday, we've got the interest rate decision. This will be the second month in a row where there is expectation of no rate rise. So potentially Canada's at its terminal rate unless data changes that kind of philosophy. So that being said, you know, the US are probably still raising rates. So the interest rate differential favors the dollar CAD to the upside. So with that in mind, what I've been seeing on the weekly chart here is we are rather range bound, but we are holding to an uptrend. We are from the monthly perspective, very nasty monthly candle last month, failing at some monthly highs over here to the left. But you know, from a weekly perspective, we're holding the trend, and we could have put in already at the bottom of the pullback. Because from high bottom to top, we pull back to 79% level, just short. Two daily areas of resistance here, or there were support as we're moving down. So the levels are 134.75 and 134.41. Those two levels are being moved back above. And notice today's dip. In my analysis this morning, my high level analysis for the week on this pair, I said, you know, watch for a dip back to 134.75 for, you know, another week up. Now we haven't got down to 134.75 today. The 4-hour chart, you can see it here. False broke that low of yesterday. Couldn't get down to 134.75. You might see it dip down. You may see a dip down to 134.75 to 134.41 through the news. So I think, unless something changes, let's just go back to the day chart. We could be seeing from just a high level overall perspective. We've had a 79% retracement here, and we're moving up like so. Okay, that would be my longish term kind of analysis. Now, let's just get rid of that fib. Just from, you know, trying to buy a dip, you know, we've just had 5 days up. Of course, yesterday was negative, but it's 5 days trading up, 1 day negative after 5 days. For our charts, fib across that whole move, you know, 79% is at that 134.41 level. Whether or not we can get down there, but we may well see the normal kind of dip down to the 62 level, 134.62. If we then start to deal back above 134.75, we could well start to see this move all the way back up. So looking for a dip there at the moment, I think, on the dollar CAD, watching your support levels, your fib levels. Can we see a bit of a higher bottom forming from the final low to continue that move up? Okay. Be aware, midnight on Thursday, we do have the interest rate decision coming out. Dollar franc. Now, last week I did say we're reversing day charts. Well, we'll go to the monthly chart. Lots of support that we're in. In fact, if we take this major range, we're just underneath the 79% level at the moment, but it wouldn't be any stretch of imagination to maybe expect support to come in here to move back up. And when you look left, so we know we're in at a 79% area. It's 90.54 is the number. We are 10 pips below there at the moment. But when you look left, there are all these. This low is a monthly low, 90.84, but there's 1, 2, 3, 4, another low there, 5 lows on the top, all in this area of weekly supports. And go to the day charts. Whilst that's a downtrend, we're at supports. You can see a nice kind of hammer. We traded inside that candle for a while. Yesterday we popped up. And today we're just trading inside the range of yesterday. And are we going to see a move back up from this weekly support area? So, 4-hour chart. What I'm seeing on the 4-hour chart is a 79% retracement. I've seen a potential of a bit of an inverse head and shoulder pattern. So there's your 79% retracement. We're being a pip or two short. Head and shoulders, inverse. Left shoulder there. There's your head. And are we going to form a right shoulder here? So will it get down to that 79% level? And after the news, if it starts to maybe spike through there, hold there, then you need to make a decision. Do you want to trade that pattern to the upside? At the moment on the 15-minute charts, you can see that we couldn't quite get to the 79% level, which is at 90.35, and we are starting to maybe hold here and head back up the range. There's been an imbalance here that may need to be filled now. So it wouldn't be any stretch of the imagination to see that imbalance get filled through the course of the day, holding just above that 79% level. So is that getting ready now to go all the way back up? So what's your setup for a buy? What's your trigger? Do you like that setup? Are we forming a head and shoulder pattern there on the 4-hour chart to move back up the range? Of course, my setups are the ones I teach. Trendline break, we've already had that. You could be going for a swing point break. So a swing point break would be a break above that high there at the moment. All right, of course, we've got the news coming out. So I will be waiting for the news to come out first, but those are the triggers that we'll be looking for later in the day. Do we get a swing point break to the upside, trendline break to the upside from that area? Okay. All right, just excuse me a moment while my dog barks. All right, I'm not sure he's quite finished, but hopefully he has. Now, Slav, I can say pounds trading at 124.33. So if you're short at 124.47, you're already in the money. Last 15-minute candles just finished. Just pop back to that. Last 15-minute candles just finished. Outside reversal. So clearly, folks breaking yesterday's high. couldn't get quite to 124.48 up there, so it's clearly protected at the moment. And what's that euro dollar doing? It's hit the 62% level. It did just trade above yesterday's high, so are we going to put in a lower top at the 62% level and move down tomorrow? Let's see what comes around. All right. So let's get into dollar yen. Now, whilst we all know the dollar index has been moving down, the dollar to the yen has been moving up. And I've been discussing this kind of inverse head and shoulder pattern here on strong weekly support, 130.40, left shoulder. And for 3 weeks, I've been saying watch down that 130.40. Draw a fib in there, you'll see there's a kind of a 62% retracement of that range, 62 to 79% area. All right, and then on the day chart, we've highlighted this last week. Then there's this little left shoulder inverted head, right shoulder there. And we're just not able to break above resistance yet, but dipped almost down to the 79% level. That was a nice kind of head and shoulder pattern. Head and shoulder pattern forming where the right shoulder may be forming on the bigger pattern. So is that going to continue up and through? Next major level. If we continue up at the moment, I'd be watching if we can break above the resistance that we're contending with, which is 133.62 weekly resistance. If we can move above there, can that become support intraday? Do we then pull back intraday to 133.62 to be support, to challenge what is starting to be a very strong resistance here at 135.16? That's monthly resistance. Now that monthly resistance, so make sure you've got it on your charts, because at the moment we're failing there after last year's meteoric rise. This 2001 high, kind of holding there this year. Well, certainly we traded above it, back below it. So, the next tests, we are going to continue up for the year. We really need to break above 135.16, or we could be looking for a reversal there. So at the moment, back to the day chart, we're going to continue up here with these head and shoulder patterns forming. We need to see a nice clean move above 133.62. Can that become support or a higher move? Now, we're just trading back down today support. So let's just drop it down to a lower time frame. In terms of the 4-hour trend, you could be just monitoring that range. Does it pull back and hold at 62 to 79 after the news? To find support, you just have a continuation pattern move up and above last week's high. So I always like the 79% level because it offers better risk reward. To move beyond last week's high, where we're struggling at the moment. So you can wait and see whether that's going to pan out. The news may just come out and it may just blow straight north and you won't have a chance. But we'll wait and see. All right, let's have a look at gold. So at the moment, it is holding that uptrend. I did 2 weeks ago, I did say it's very high levels, but dipping down to 1959 could be a good support level to be a buyer at, and that proved to be right. So the big question is, are we moving beyond the 2070 level? This double top area, so the highest one is 2074, 2070. From a monthly perspective, we're actually in a downtrend coming up from a lower bottom. So are we actually going to fail up here long term, or are we going to be moving through that double top? Just notably, this is expensive for gold historically, so it's at a very, very high level. The traders want to be buying at such a high level. Weekly trend is holding. It's managing to get support strongly now at 1959 over the last 3 weeks. Next barrier now is to start to hold above 1998. So can we start to exist above 2000 with some convincing price action? Wasn't convincing yesterday because we closed below it, and there's all these couple of day chart tops here, so it's difficult. It's not an area where I'd be buying, but if you've bought from lower down, you're just monitoring the trend. As long as the day chart trend's holding, there's every chance it can continue up, but it is very high level to be a buyer at the moment. You know, from a 4-hour perspective, seeing a 4-hour uptrend form where you would kind of get a 62 or 79% retracement back to support would be the ideal setup, like so. But of course, price isn't presenting that yet. But I mean, if you want to buy with a trend, that's the kind of price action you want to see: a move up, a pullback where you get a nice fib overlay with that weekly level at 1998. Can that hold a support on a dip within a 4-hour uptrend for a continued move up? So I wouldn't be buying here, but I'm just theorizing, you know, what you could be looking for. If you're looking to take a position to the upside, you want to see 1998 hold as support on a dip. So I might just leave that there. We can review that on Thursday. But any thoughts, people? Do we think gold's going to survive up there and move beyond? Slav, you think this will get driven up to those highs? Well, it could. I mean, of course, the play could be that price gets driven up there and you look for a reversal down from those 2 monthly highs at 2070 to 2074, I think the numbers were. So, I mean, yeah, just sitting out on the sidelines, having a game plan for maybe a major trade would be to watch for price to come up to, let's put the level in, 2074.88. You know, if price comes up to that high once more, we couldn't actually get up to that high. That was the war high. Couldn't get up to that high. So we may only be looking at the lower high to the, not the highest high. But if we come up and reject, get a nice daily rejection there, then, you know, sellers are going to be all over that rejection. So maybe the game plan is just to sit tight, wait to see if we hit up there and then what happens up there. All right. Now, trying to be a buyer at such high levels to me is like, it's almost like suicide, really. You know, you want to be buying at low levels, taking profits at high levels. We're at high levels, so. Edwin, you say you've got a little buy going for gold if we can break and retest the high yesterday. Well, I mean, if as long as you're getting a little play and you're not loading the boat, no, there's every chance. There's still the chance, of course, if you can buy a dip or see some little intraday breakout, there's still the opportunity, of course, that we could significantly break above these highs. And of course, to benefit from that breakout, you have to be in. It's just that we're at such high levels. It's difficult to being a buyer at such high levels. All right, so that's gold. So you can either look for, you know, some form of opportunity to buy on a dip, like I was showing you, or you wait for the failure potentially at the top. All right, any final questions? And as you're telling me gold will hold the uptrend. Well, you know, when gold was up here, people were telling me it's going to $2,500. And well, I've one economist in America, a lady, can't remember her name. I've seen on YouTube, I've seen a video headlines on YouTube saying gold's going to 4,000. So it needs to get above 2,100 yet before we can get to 4,000. Just saying. All right, so obviously you can watch that with anticipation, and we'll see. mean, I'm no economist, but of course, if the US dollar gets totally out of favor, then of course, money could be flowing into gold for a considerable break higher, but we'll just have to wait and see how the fundamental landscape translates over the next few months. We know the dollar index, it is at a critical level of support here. If we get a complete break of supports, then money may well be flooding out of the US dollar, moving into gold. So we'll see what brings over the next week or two. I'm just hoping the US dollar will hold itself here. Some nice levels showing it on. You know, there's a perfectly nice selling level here on the pound dollar. Why should it go to waste? That's my theory. And as well on the euro dollar, there is a perfectly good selling level up here as well. So why should it go to waste? So let's all drum up some US dollar strength. All right. That's just my bias at the moment. I'd love to be seeing a nice failure up here for a nice decline. Let's see what happens. All right. Any final questions? Of course, if you're coming in late and you didn't catch the news front, we had the CPI data coming out. 10:30 p.m. I did notice last week, I think it was Fed Mester, if I got the name right. I think she's the Fed from San Francisco. Could be totally wrong on that, but I might be right there. She was saying that, you know, as we're heading forward, anticipating that interest rates will be at least 5.1% in the US and holding at those levels for a considerable amount of time. So to me, that at least favors the US dollar to at least have some support and stay range bound. I don't think at the moment we're going to get a cut in rates. So we'll see. It's going to be interesting tonight when the CPI data comes out. Does that come as expected? Does it print higher? If it prints higher, we're going to see US dollar strength. So and of course, on Thursday evening, we also have the PPI data coming out as well. So a couple of risk items there, most definitely coming out for the US this week. And the FOMC meeting minutes, 4 o'clock in the morning. Slav, that's what you're saying to me. With oil price going up, the CPI figure will likely to come out higher than expected. So let's just have a quick look at oil. What's that been doing? I don't trade oil, so I don't keep my eye too closely on it, but all right, missing a little bit of data in here. Doesn't seem to want to pull in, but what I can see is we're at some form of resistance. When I last was looking at this, we were at a clear level of monthly support down here, through here. Lots of highs, old highs in here. But the monthly trend here on oil is down, and we're probably at around about a 62% retracement from that bounce. There we go. All right, we're up to weekly highs. And still doesn't want to come in this data, so it would be nice if I could just see what price was doing through there. But you can quite clearly see for the last 1, 2, 3, 4, 5 days, we are at clear resistance there at 80.96.8. All right. So we could be forming a double top there on the day chart on oil with a 62% retracement within the monthly range. In fact, a weekly double top there. Wouldn't surprise me to see that go down. But now it's like telling me that, oh, we're saying price gapped up on the OPEC news. Okay, so we're not missing any data there. All right, so that gap could get filled for sure, and start to confirm that, if we trade below, so this low on that gap day, 78.94, if we break 78.94, it's all good for the sellers, I suppose. So are we holding up there at 80.96 to break down, back down? You can monitor that if you like trade oil. And SA and Russia cut production. All right, so a few things supporting: less production, higher prices, but of course, Northern Hemisphere is heading into summer, so I guess there's not as much demand. I guess, you can wait and see if you see a technical reason there to be a seller, but if it starts to want to trade down to fill that gap, that would be a technical reason for sure. Azure, you want me to look at Euro Aussie, so all right, last one before we go. Euro Aussie. All right, definitely an uptrend on the monthly and the weekly. So I'm going to go back to the monthly. I'm just trading into monthly resistance here, so it's not a great area to be a buyer. Whilst the trends are up, 164.36. And as well, there are lots of monthly tops coming up. There's one here, 165.95. And if you look at that monthly top there, 165.95, all these rejection tops here. So it is coming up to a strong level of resistance for sure. That fib's not telling me anything. So we know we're in a monthly trend up and the weekly trend out. We're just heading into some strong resistance at the moment. So it's not an area where I'll be buying, but of course, if you're in lower down, you're just wanting that area to break. And it's an uptrend on the daily. And it's a big consolidation on the 4-hour. It's just struggling at last week's high at the moment. But it is getting support on last month's high. So last month's high is here. It's gotten support there. So if you were thinking of buying, that would have been the area to buy a reversal on last month's high. Now, really, if you're wanting to trade, well, if this moves up any higher, you're going to be into resistance. So it's a difficult play. Very difficult there to be a buyer as you're heading into that strong resistance area there. All right. Been moving up nicely, but you're getting into some resistance there. And you're looking for a short. All right, so you're definitely into an area where the market could reverse at. You just need your trigger set up. All right, so it is coming into an area of resistance for sure. But it is in a strong trend. So you really want to see, on the day chart, maybe it'd be nice to see a lower top, lower bottom formation, or a very nasty daily chart rejection. Something to shout out here that says, okay, yes, we're at resistance and we could be getting a shift there. If the euro dollar moves up above its resistance level and goes and retests 110, this is probably going to move up because the Aussie dollar is rather weak in comparison to the euro dollar at the moment. So you're looking at 165. Well, the next high is at 164.36 at the moment. So you can watch that area. 164.36 is the next resistance level. So, and that's a monthly top just here. So that would be the next level I'd be watching. That monthly top over here that we significantly false broke a number of times is at 65.95. So, the 166 level for sure would be an area to watch for price to hold out. Okay. All right, everybody. You should have plenty of information there that you can go away with and watch the market with over the next 24 hours. And Slav, say it seems pound is rejecting 124.47 at least for now. Yeah, for now it is. Hopefully CPI data comes out US dollar positive, and it'll be happy days from that level. I mean, it's just holding underneath there, a little bit consolidatory. It's too soon to tell whether or not, CPI data is going to be the thing that tells you. You're just going to have to wait and see. All right, everybody, if you've got time tomorrow, then we do have a webinar tomorrow on market liquidity. So if you've never gone across that topic, it's my part one of Smart Money Concepts. It's only going to be a basic introduction, but I'm sure you'll find value from that webinar. If you don't know what market liquidity is, that will be a good introduction. So that's tomorrow evening at 7 p.m. if you have the time. Just head over to the webinar page and register your interest. Okay. Other than that, thanks very much for joining me this evening. Look forward to seeing you next time. Thanks, everybody.